Let's get to the big story breakdown. Well, in New York morning trade, Bitcoin has reclaimed the 89,000 level, and this does come on the heels of cooler than expected U.S. inflation figures. Now, the rally in crypto-linked stocks lost steam earlier this week, not long after it began on Wednesday, as Bitcoin pulled back from a move above 90,000 in midweek trade. And we did get some Fed comments, but of course, this morning we're paying attention to inflation figures. So joining me to weigh in this morning is Baehr, head of product at CoinDesk Indices. Andy, great to have you here. Thank you so much for joining me.
Thanks. And yeah, so Bitcoin started the year around 93, 94,000. So we could scratch for the year. It's going to be kind of a close one. We've got a couple of weeks left, but there's no doubt about it. Q4 has been kind of a heartbreak, and given all the exciting news that's happening, including the news that you reported this morning about Coinbase and Binance, and all these new markets being available, all this integration work, it's perplexing a little bit. The markets have been so soft, but there you have it, and we'll have to see how things start out in the new year.
Yeah, and you just mentioned how we started the year, and although we only have a few more trading days left for this year, we're keeping an eye on that price action for both Bitcoin and ETH. And you mentioned quarters, so why are quarters so important when it comes to this asset class?
It just feels like a quarter is the attention span of a trend, and we will do much more work to see if there's more analysis. But if you go even back to the beginning of 2024, when the Bitcoin ETF started to launch, you kind of had one good quarter, two bad quarters. The fourth quarter was great. This year, we had a very soft first quarter, which was a surprise after the inauguration, and then two very powerful, broad rally quarters that were led by Ethereum, but really brought the whole market up. CoinDesk 20, CoinDesk 5, Bitcoin, Ether all hit all-time highs. And then it was really end of September, beginning of October, that last all-time high hit, and the fourth quarter's been really, really a heartbreak, right? So look, for people who are kind of looking for the bottom and trying to make sense of this all and a bit numb from the false rallies, well, as the clock turns into the new year, it'll be a new quarter, and we'll see where attention goes from there.
Yeah, numb and heartbreak are key words, Andy. But as we look ahead to the new year, there's a lot coming on the horizon, including policy and, of course, midterm election year in 2026. But when we take a step back and think about how adoption as well as digital assets has evolved this year, I think there's a lot of competition for attention here. So with prediction markets as well as tokenized equities, how are crypto markets doing when it comes to competing?
You said it exactly right, that it's people's attention that is really people are competing for, right? The Coinbase news yesterday, the news about Polymarket and Kalshi kind of integrating into the United States and getting regulatory support. We're putting, a friend of mine has this great expression, putting new wine into old bottles and old wine into new bottles. Tokenized equities on the one side trading on-chain, and then you have equities trading at a traditional crypto exchange, but traditional equities, but you can fund those with stablecoin values. I think prediction markets, betting, events, it's clear that crypto has reminded everybody that people love to trade, and that kind of activity is profitable, right? So that's great for those businesses. It's good for integration, and it's great that the regulators are coming around to making a safe, supported environment for these kind of activities. For investors who are looking at top tokens and saying, you know, what does this mean for the price of Ether? What does this mean for the price of Solana if I just want to allocate and not trade? That's the tougher question.
And Andy, since the beginning of this quarter, we've been paying attention to data, and I do want to ask you about what we've been seeing when it comes to centralized exchange spot volumes. What is that telling you?
Yeah, it's been, I think it aligns with what we've seen with price action, and it aligns with what we've seen with kind of energy and fast money location. Back in August, we had record high volumes, right? The entire crypto asset class turned over 2-3 times, over 10 trillion of volume between spot exchanges and derivatives. November was super soft, right? And coming off of the price action that we had in October, it was almost a little bit of a surprise. With more volatility, there was less trading activity. But that's kind of aligned with our feeling of numbness, right? That we're trying to bounce off 90,000 in Bitcoin, trying to bounce off 3,000 in Ethereum, not quite getting enough energy to move those prices higher. So We just have to, I guess, admit to ourselves and recognize that we're in a period of low energy. Again, hopefully the end of the quarter brings the end of that kind of attention span kind of phase, and then we can head into the new year refreshed and ready to go.
And speaking of the new year, I do want to ask you one final question about valuation. So looking beyond Bitcoin and looking at ETH as well as Sol, DeFi tokens, as well as XRP, what are you seeing in terms of outlook and how are you justifying valuation?
I think now that there's plenty of ways for people to, either in a native form or in ETF wrappers, to expose themselves to digital assets, what investors will start to demand is more of a narrative connection between stablecoins, tokenization, activity on layer ones like Ether and Solana, and XRP, and Polygon, and Avalanche, and Canton, and the value of those tokens. They want to have those be knit a little bit tighter together. Now, we all know with stocks, a stock can have better earnings. That doesn't necessarily mean the stock price is going to go higher or lower. There is definitely some market kind of influence there. But with crypto, I think people want a little bit of the story knit tighter together so they can feel confident allocating more money, more than that 1 or 2%, for the long term as an investment. And we'd like to see more of that in 2026.
Well, thank you so much for joining me today, and happy holidays, Andy.
Happy holidays.
Thank you.